It was not what the buy side wanted. This is not good for tech. It certainly is the smallest beat we've seen in Microsoft for a while. So they've been averaging 330 basis point beat, and they beat by 200. So beats lower than anticipated. And if you look at the intelligent cloud business and productivity, that was in line. Most of the beat was in personal compute, and that's not where we wanted to see the beat. The bright spot, 37% bookings growth, was phenomenal, and that accelerated.
But I mean, Brent, I'm so interested to hear you say this. It wasn't enough. The analyst forecast should factor in expectations. So a beat is a beat, is it not? I mean,
it is, but I think right now it doesn't matter about what happened in the last quarter. It matters about the guide and what's happening. And so I think ultimately this was not as good as the street wanted, and therefore the assumption is that are they going to be a little more conservative on the guide based on what's happening? That's what's driving this. That's what's going to matter in Amy's comments coming out on the conference call. So look, Microsoft's a phenomenal story. Right now we're in a tech downdraft. We're in a software valuation reset. And there's little that these companies can say right now other than, pipelines are phenomenal. We haven't seen any deterioration in the overview of what our customers are doing. If they say that, that'll get the stock going. But ultimately, the numbers are the numbers, and it wasn't quite as good as we've seen. And clearly, we've been talking about this COVID pull forward. Are we seeing a little bit of digestion from what we've taken on the last year and a half? So good numbers. We still like the story. It's not an expensive story, but it's not what the street wanted.
Are you talking specifically, Brent, about the Azure numbers, the 46% growth there? That wasn't enough?
Yeah, so Azure was right in line, maybe at the bottom end of what the buy side wanted. So Azure was 46, the constant currency. They were at 48 last quarter. That was not, it was good, but again, it's not what we were, we've been seeing these big beats out of tech. And so now we're seeing inline prints. Now what happens to the guide in this environment when everyone's on edge and tech is falling off the side of the cliff on valuations right now? This is not reassuring. Microsoft sets the tone for tech and the rest of software. We're not off on the right foot. Now, they can address this on the call. They had a great bookings number, right? 37% bookings growth is fantastic. So I don't want to make too much out of the current quarter, but what we can see so far is not what we've seen historically out of Microsoft. Again, bringing in the theme of digestion, and are we going into a slower tech tape in the next couple quarters? That's the worry.
So Brent, talk us through this, the valuation now for Microsoft, because it's down with the after hours move, it's down like 23% or so from its high. Is it cheap now? Is it attractive? If you're a 5-year view, is this a good entry point, even if it were to slip another 5 or whatever % in the next month?
We have a $400 price target. It's 18 times EBITDA, which the large cap software group's at 31. So discount. Price to earnings, it's mid-20s. You have the large cap software group at 32. It's at a discount there. On EV to free cash flow, it's at a discount. So all the metrics we look at, and we look at a group of metrics, it looks very attractive. I think right now it's just we are in a spot right now where our clients are saying, look, is it better to wait on tech? Because clearly it seems like we're in a digestion, risk off mode. And this may not even have anything to do with the numbers. This has to do with tech fund flows. And we're seeing obviously money leave quick, right? As we say in the industry, big hat, little cattle, and the cattle aren't there right now.
Wow. Well, you summed up the mood. Brent, thank you. Brent Thill.
Mood's tough right now. Sorry, it is.